Hello, and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we are very pleased you've joined us for the AI and Technology Conference. The next presentation of the day is from ConnectM Technology Solutions. Please note you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings by clicking Book a Meeting. At this point, I am very pleased to welcome Naeem Hussain, President of ConnectM Technology Solutions, which trades on the OTCQX Best Market under the symbol CNTM. Welcome, Naeem.
Thank you so much. It's a pleasure to be here. Once again, I'm Naeem Hussain, President of ConnectM, ticker symbol CNTM on the OTCQX. So at a high level, ConnectM is a constellation of tech-driven businesses powering the modern energy economy. We sit at the intersection of tech, distributed energy, and AI to create economic value for equipment OEMs, service providers, and enterprises. Over about the next 20 minutes, I'll walk you through who we are, what we've built, and why we believe ConnectM is positioned at a compelling inflection point. Quick legal note, today's presentation contains some forward-looking statements, may reference certain non-GAAP metrics. Actual results may differ materially. For full details, of course, please refer to our SEC filings, including our recently filed S1, our 10K, and our quarterly reports. So who are we? At its simplest, ConnectM is two pieces working together. The first piece is Keen Labs, our wholly owned tech subsidiary, and you can learn much more at keenlabs.ai. Keen Labs houses our AI models, our various software platforms, and our battery technology. You can think of Keen Labs as the company's innovation engine. The second piece is the ConnectM operating companies, a network of service and technology businesses across home electrification, smart mobility, and last mile logistics. And we'll jump into all three of those in the presentation. So these are the distribution channels that put Keen Labs technology into the field, into HVAC systems, into vehicles, into solar installations, and delivery networks. So the key insight here, the takeaway, is our service businesses are not siloed. They're a distribution and data collection infrastructure for Keen Labs, which houses our software and AI platforms. And that's the flywheel that you see pictured. So our leadership team really blends deep tech, energy, and operating experience. Bhaskar Panigrahi, our chairman and CEO, who's in India at the moment, is a serial entrepreneur with 2 prior IPOs and decades of experience scaling infrastructure and software businesses. His claim to fame, and he's not here, so I can brag a little bit. He's the original inventor of spell check technology, which was, of course, ultimately licensed to Microsoft and became one of the most used technologies of all time. I come from a finance and technology background myself. I'm a 4-time founder, 3-time CEO with 2 exits, over $100 million of capital raised. I lead corp dev, overall strategy, as well as our capital market strategy, of course. Bala Padmakumar, our vice chairman, Stanford-educated technologist who over many decades has scaled several energy and battery companies, namely alongside TJ Rogers. And we're, of course, supported by a strong team of veterans from companies like P&G, Honeywell, GE, Amazon, and of course, major energy providers. Quick company snapshot. We were founded in 2019. We're headquartered in Marlborough, Massachusetts, right outside Boston. We have operations mainly in the United States and also across India. We're running at an estimated $35 million revenue run rate as of year-end 2025. We hold 12 patents across energy systems, control systems, and Internet of Things. It's really germane to note that over 70% of our equity is held by management and long-standing institutional investors. That means our management team is highly aligned with common stockholders because we are common stockholders in a big way. And from a capital market standpoint, we've really spent the last 18 months cleaning up our balance sheet, retiring over $10 million of legacy convertible debt and derivative liabilities, restoring our SEC current filing status, and we've moved up to the highest OTC market tier, which is why I'm presenting to you today. We did recently file a public S1 just last month, and we are engaged in a motion to further uplist to a national exchange. So we operate across 3 large and growing markets where our technology provides strong leverage. First is our VPP and battery platform, which is reported in our financials as our own service network. Here we sell B2B in a roughly $2 trillion residential and light commercial market. It's a huge market. Our own service providers, right, install AI-powered climate systems, solar and battery storage for residential, commercial, and industrial customers. And when connected to our KeenLab software, these physical assets become grid interactive resources, commonly referred to as virtual power plants or VPPs. So as a quick VPP primer for those who may not be familiar with the term, instead of a utility building one large power plant to meet peak demand, also known as a peaker plant, they can coordinate thousands of distributed assets like heat pumps, like home batteries, solar inverters, so they can collectively reduce load, shift consumption, or even feed energy back to the grid on their command, right? So the utility gets the same relief it would get from building this peaker plant at a fraction of the cost and with zero emissions. So it's a win-win for everybody. And our software is what makes that coordination possible and more efficient. The next market we operate in is smart mobility. And here we sell connectivity and SaaS in a roughly $60 billion mobility market. We provide visual displays, connectivity hardware, and specialized software to mobility companies like Volvo, Motovolt, and Ashok Leyland. And this segment is primarily India-based revenue. Third is smart logistics, where we sell a pure software platform in a very large $160+ billion market. Think of the product there as Uber meets FedEx for last mile delivery. Now, the common thread across these segments is B2B, infrastructure oriented, and again, sitting at that intersection of electrified hardware, data, and AI. This map gives you a sense of our geographic reach. Today, we collect over 30 gigabytes daily of data. We serve more than 35,000 homes and light commercial facilities through our solar and HVAC service networks. And we process over 17,000 last mile deliveries per month. Now, the blue dots show our smart logistics coverage, and you can see we're in most major US metros. The green dots show our HVAC service provider operations, mainly in the Northeast and Florida. And the orange dots are our solar and battery footprint, mainly in the Midwest. And then the red dots in India, of course, represent our smart mobility operations. Now, these are all live operations generating revenue and data today. Let me walk you through the home and building electrification stack. And this is where a lot of our near-term value creation is concentrated. This is the electrification and VPP stack. So on the left, we sell smart hardware. And pictured here is our Keen branded AI heat pumps. These are the most efficient cold weather heat pumps on the market. Heat pumps is a little bit of a misnomer. Those devices do both heating and cooling. Typical installation is a $15,000 job. Now at the center is our connectivity module. So this is a hardware bridge that connects our hardware to our VPP software platform that you see on the right. So that VPP software platform sits on top. It's an orchestration layer, and it transforms, and connects that HVAC system to our cloud. And again, it empowers those physical assets to become those grid interactive VPPs that we discussed earlier. Now, here's a key point for investors. The heat pump is not just a heating and cooling product. Heating and cooling is often the single largest controllable energy load in a home or building. In a home, it can be up to 50% of your energy bill. So our smart platform, our smart controls turn that load into that VPP-ready asset. And then all of a sudden, your heat pump is capable of demand response, grid optimization, time of use management, when it should be running and when it shouldn't be, in a really intelligent way to balance comfort and efficiency. And all of those things enable recurring revenue and high margin data opportunities for ConnectM. So complementing the stack, right, we have two battery product lines inside, again, of Keen Labs that are each designed for different jobs. These technologies came to us fairly recently through the Empirix acquisition that we announced in Q4 of 25. So on the left, you'll see high-C, hybrid energy storage. This is engineered for environments where you need instantaneous power delivery. We're talking millisecond response times, kilowatts of energy, all the way up to megawatts of power, and tens of thousands of charge-discharge cycles. So target markets for this application would be data centers, critical infrastructure, warehouses, industrial equipment, and last mile transportation. And high-E energy storage is designed for longer duration residential and light commercial applications, think home batteries. It uses a pretty unique lithium iron phosphate chemistry with a modular architecture, and that modular architecture makes it very flexible. This supports grid backup, load leveling, time of use optimization, all those features I was talking about with regards to heat pump acid or solar acid in the home. And of course, it is VPP ready out of the box, which means it integrates directly with those pieces of hardware that I mentioned and our software platform. So it is important to note that both of these product lines are digital native. That means they connect into our Keen Labs network for telemetry, equipment health, monitoring, fleet optimization if it's on a fleet. So the takeaway is storage is not just a feature for us, it's an energy platform. Now, I'll quickly walk you through how this sort of flywheel works in practice. As discussed, we primarily sell our AI-powered heat pump to large distributors who actually in turn sell this equipment to HVAC service providers all over the United States. Now, these service providers then sell the equipment to residential and light commercial customers. Again, that's about a $15K or higher job. But the real economic engine is what happens after the install. We built an app that allows an HVAC salesperson to cross-sell solar and battery add-ons, right? So that can add 75,000 of incremental revenue with minimal additional customer acquisition costs. And conversely, a solar installer with their foot in the door can also cross-sell the Keen heat pump with this app that we've built. So every connected asset sold feeds data back into our software platform that you see in the middle of that image there. So you get the self-reinforcing cycle, more installations, create more connected assets, generate more data, improve our AI models, which increases customer value, which drives more adoption, and you can see the flywheel. So we refer to this as our Trojan horse strategy. Our hardware enters the home as superior HVAC or solar battery products on the face, and then we build the software-driven energy management relationships that last for years. Next, I'll talk about smart mobility. So this is our segment where, again, there's a hardware connectivity and software application layering. Here, the hardware and connectivity are embedded directly into vehicles right on the factory floor by vehicle OEMs. Customers then subscribe to our connected operations platform as a SaaS service. Once a vehicle is connected, we can support over-the-air updates, telematics, fleet dashboard, vehicle health, and other value-added services like driving behavior. And this embedded hardware, right, that you see with this dashboard, this display, and this connectivity module really makes switching expensive, right? So it creates platform stickiness and keeps our churn low. So we really like the operating leverage that hardware element provides us. This segment serves over 20 OEMs and enterprise customers like Volvo, like Motovolt, and Ashok Leyland. And again, these customers are primarily based in India. On the smart logistics side, our third segment, again, this is a pure software business in a high margin segment. Uber meets FedEx is a great mental model for last delivery. So we provide, through our software, an orchestration layer that matches supply and demand for last mile delivery of optimizing routes, managing drivers and fleets, handling proof of delivery, and it all happens on our platform. We earn a roughly 20% transaction fee on volume that runs through the platform. Our US operation is running at roughly $1 million of revenue a month and growing. And we've got longstanding B2B customers like Tire Rack. This business is great. It's profitable, it's capital light, and it's a great example of how our tech can scale without requiring heavy incremental investment. Again, a quick case study of what smart logistics looks like. So Tire Rack, one of the largest online tire retailers in the United States, their challenge was moving high volume, bulky tire shipments from distribution centers directly to installers and dealers with same day speed. And they couldn't do that cost effectively using traditional carriers like UPS or FedEx. So we built Tire Rack, a virtual dedicated delivery network, by Uberizing labor across regional and independent carriers. And our software incorporated all the things that they got from the bigger players: real-time dispatch, routing, tracking, proof of delivery. And we scale this capacity dynamically to match their volume. So as a result, Tyrek moved from traditional parcel shipping to a fully managed tech-driven delivery network, improving their speed, delivery flexibility, and unit economics. So across everything we do, there's a really powerful data flywheel. Again, I keep coming back to data. Today, we manage over 130,000 connected assets, such as climate systems, vehicles, solar installations, batteries, and logistics endpoints. We collect roughly 30 gigs of data a day from these assets, all feeding into our software platforms. And you heard this earlier, and it's worth repeating, higher volume of data improves our AI models, better models increase customer value, higher customer value drives more adoption, and in turn, creates more connected assets, and the cycle continues. This is the core of our long-term thesis. We're not just a services company, we're building a proprietary data asset that becomes more valuable with every connected device, every installation, every delivery. And our operating companies are more than just distribution channels. They really enable our data and AI to be our competitive moat. So what do we actually do with all the data? I mentioned data a lot. Here's 6 use cases, both in the near term as well as the medium term, that can unlock at scale immediately to the next 12 to 24 months. So on the near term side, first we have demand forecasting that powers VPP usage by predicting building energy needs 15 minutes to 24 hours ahead. Then we have a use case where predictive maintenance flags equipment health issues, and much of this is in use today. AI can predict imminent equipment failure, and this of course reduces truck rolls by creating a proactive element for these service providers. It improves warranty economics for OEMs as well. And finally, on the near-term side, cross-selling propensity modeling, right? That identifies which heat pump customers are most likely to add solar and battery and vice versa. This improves our VPP attach rate without adding incremental CAC. So this cross-selling application is actually hitting the market for us in a matter of weeks. And we have a pretty long waiting list of service providers that are very interested in piloting it and using it. In the medium term, automated grid bidding, think of this as an auto bidder platform that optimizes dispatch and pricing across distributed assets in real time. Tesla has a similar product. You may have heard of auto bidding technology. And then we have building energy benchmarking that scores building efficiency against peers using our 35,000 building data set. This is valuable to utilities, insurers, and real estate platforms. And finally, battery fleet intelligence for our high C and high E deployments. This is a licensable data product for OEMs and fleet operators. So the takeaway from this slide is that every connected asset makes the platform smarter and increases the possibility of more recurring revenue in myriad ways. And over time, we see at least 3 additional high margin data monetization paths beyond our current revenue stream. So I listed the 3 I'm most excited about here. One is pricing risk better with actuarial data from actual equipment operations and not just actuarial tables. So think about asset performance, warranty risk, predictive maintenance again. This is the kind of data that insurance companies and equipment OEMs will really pay dearly for. 2, super hot space right now, cybersecurity, for a good reason. And this is cybersecurity for connected physical assets like vehicles, drones, robots, HVAC systems, of course. As these assets proliferate and become more and more connected, securing them becomes a critical need either for enterprise or national security. Securing HVAC alone, as it's a pretty critical intrusion point, is a multi-billion-dollar market. And finally, we have utility computing and that next generation of VPPs where energy, compute, and storage are all orchestrated together. So an example here would be selling better pricing algorithms to utilities. All right, let me walk through some financial slides quickly. I know we're coming up on 20 minutes. Revenue has grown from roughly $2 million in 2021 to an estimated $35 million in 2025. That's an 85% CAGR. Over the same period, gross profit has expanded roughly 17 times as we've layered in more software, more connectivity, more high margin services on top of our installed base, which has grown. And the direction is clear. We're growing top line while improving the margin profile. We're really focused on driving towards EBITDA break even and self-funding growth. so that when we raise capital, it's an accelerant for profitable growth, not a plug for operating losses. Our mandate in 2026 is clear. Get to profitability and stay there. It's that simple for us. Now here's a snapshot of our balance sheet and cap table as of January 31st, 2026 on a pro forma basis. On the left side, you have September 30th actuals. We had about 2.2 million of cash and 22 million in total assets with the stockholders deficit. On a pro forma basis, giving effect to recent debt conversions, some acquisitions of GeoImpacts and Empirics, our Sun Solar investment, total assets increased past 40 million, and stockholders' equity moved to $10 million positive. Super sharp turnaround from the 50 million deficit we inherited at our de-SPAC offering back in July 2024. Our cap table on the right shows 168 million common shares outstanding today, 2.3 million options, about 13 million warrants, which are substantially out of the money, roughly 19.5 million shares that would be issuable upon conversion of remaining convertible notes for a fully diluted count of just over 200 million shares. The cap table takeaway and takeaway overall is cleaner capitalization profile, stronger equity base. We're trying to, as best as we can on a rapid basis, to simplify the cap structure, reduce overhangs, and improve transparency. Some public comps real quick. This shows the public companies that touch similar end markets. Now, we're not claiming to be in the same scale as these businesses, but these are shown to illustrate our position. What you'll notice is that companies with strong software and SaaS components like Samsara and Descartes trade at 10 to 12 times revenue on high gross margins. Hardware-heavy companies like Enphase, Generac, they trade 2 to 3 times revenue. And a company like Fluence, which had a great run-up and now is corrected a little bit, has a more capital-intensive model, so it trades around 1 times. ConnectM today operates, of course, at a different scale and stage, but I think the vector is clear. As we grow our software and data layer through Keen Labs and shift revenue mix towards more recurring high-margin revenue streams, we believe the business should command a meaningfully higher valuation than we're at today, and certainly more than a pure hardware or services company. However, we do like the potential operating leverage that R&D components and certain hardware provides, as well as I said, keeping that stickiness for the hardware, for the software by reducing or making switching expensive. Some key takeaways to bring it all together here. 3 things I'd love for you to take away about ConnectM. First, Keen Labs is our innovation engine. It leverages ConnectM's distribution network across home electrification, mobility, and logistics. We're not just building tech in a vacuum. We have live customers, revenue, and data flowing through the platform today. Second, we're driving operational efficiency every day through measured SG&A control, scalable unit economics. Q4 actually was our first quarter in a long time that we hit net operating break even, or sorry, we actually generated a net operating profit. We're working through our Q4 reporting right now, but we will show a net operating profit for Q4. And we're focused on reaching EBITDA break even and self-funding growth in 2026. And finally, we're well positioned to expand into some of the most compelling growth areas in the economy: robotics, data centers, advanced energy storage, and High-C is a great example as a differentiated offering for high power, short duration applications. Again, we believe combination of a deleveraged balance sheet, growing recurring revenue, strategic deals that we've continued to do throughout 2025 and will continue to do in 2026, like Empirics and our recent Sun Solar investment, and a filed S-1 for a national exchange uplisting creates a really compelling setup for liquidity and long-term value creation. ConnectM is evolving from a services roll-up that we once were into a tech platform that monetizes the modern energy economy. We hope you'll join us for the ride. Thank you so much for your time and attention. I'm happy to answer some of your questions on the business. Okay. Go to the dashboard here. questions. Having a hard time seeing the question dashboard.
All right, hi audience. Looks like Naeem's going to refresh his browser. He will be back in a moment.
Okay, I'm back, sorry.
You're back. Are you able to see it now, okay?
I'm able to see it now, yep, and I'm moving
awesome.
it to you. Okay, thank you, I'm sorry about that. So Sun Solar is described as a best-in-class platform with strong brand equity. How are you planning to leverage that brand to accelerate customer acquisitions for AI-enabled VPP offerings without materially increasing CAC? That's a great question. That company is running a little over a 10% EBITDA margin, so they've managed to figure out how to profitably run a solar business, which not many companies in this country have done. Their management team is exceptional. We have full faith and support in them to figure out how to expand their business beyond their region. And I think the 1 + 1 = 3 with that deal, and which we're all excited about, gives them capital markets access, gives them access to some of our VPP kits and some of our VPP orchestration layer that we're really excited about. And I think the combination of some scale, some tech, some reach that ConnectM provides, and their management acumen will really allow them to expand in a meaningful way. I love that sector. I think it's been beaten up a little unfairly over the last year, and I think it's due for a really roaring comeback, and I believe we backed the right horse in that space. You recently upgraded to OTCQX and received shareholder approval for a reverse split range. How do these steps fit into your roadmap towards a potential national exchange listing, and what milestones should investors watch for next? That is correct. We have received board and stockholder approval for a reverse split, a 34-to-1 reverse split. We are currently in a motion to uplist to a national exchange. We've engaged Think Equity as our investment bank. As you can see more details in our S1 that we filed publicly in January. So the sequencing would certainly be when we are ready to uplist, we would effect that reverse split days or weeks prior, and then it would be in conjunction with an uplisting to a national exchange, potentially in conjunction with an offering. But these are all motions that we will be publicly educating our stockholders and investors on in the coming weeks. But we're really excited about the trajectory and the possibilities that open up to the company now that we are sitting at a $10 million plus stockholder equity position. Our market cap has been over 50 million for a couple of weeks now. So from a major national exchange listing requirements perspective, we're in a nice position that we control our own destiny. We don't have to raise money to qualify or to meet a listing standard. So we'll do what's in the best interest of our shareholders. And again, management is highly aligned with common shareholders. You've talked about portfolio simplification to unlock value. Which non-core assets or business lines are you most likely to monetize or de-emphasize, and how could that accelerate your path to self-funded growth? I think that's a very germane point, and it's one that management is laser focused on. It's one of the main reasons our CEO has been traveling in the last few months, is to take a look at some of our business units that are not being recognized at the valuations in the public equity markets that we think they should be trading at, finding ways to realize asymmetric value for those business units or technologies, and then again, accrue that value to our shareholders. So you will see simplification initiatives being announced in a matter of weeks and maybe more in a matter of months that do bring a focus, more of a focus to the business, and again, really underscore our commitment to hitting EBITDA break even and generating positive EBITDA in 2026. We have time for one more. I know we're at 1:30. I'll try to do one more.
Go ahead and sneak one more in.
Okay. I'm just trying to scroll here. So what message do you want new institutional investors to walk away with about how ConnectM is different from a traditional EPC or installer story? And hopefully my presentation really helped answer that question. But again, I'll reiterate, we're not a services roll-up anymore. I really want us to be seen as a tech platform that monetizes that tech through owned distribution as well as through enterprise sales, right? And I think we're executing both of those motions. You can see our press releases just from the last 3 months. But Keen Labs and the formation of Keen Labs back in October, again, underscores our commitment to investing in technology. And it's not R&D for R&D's sake. We have the benefit of a captive building network, a captive transportation network, a captive logistics network that we can operationalize that tech into on a quick basis, and then of course scale that beyond our network to other infrastructure and B2B customers. That's the vector that we're on. And again, profitable growth is our mantra for 2026 and beyond. Thank you so much.